out. The event is being recorded for the benefit of all the folks who weren't able to attend and for your review subsequently. Hello, everyone. Thanks for joining us. On behalf of NYCERDA and the guest speakers, I'd like to welcome you to the inaugural session for Financing Solution Engagement Series with New Lenders. We appreciate the time you took today to join us. We will have two presenters today. Blake Jones, Board Chair, Clean Energy Credit Union, which is a national credit union looking to enter the New York market for residential lending. And we'll have a follow-up with Jay Mervs, Director of Business Development at NYCEEC, which is one of the first nonprofit green banks in New York. They're targeting more of the multifamily and commercial sector, and we'll get more details. At Financing Solutions, our goals are to increase capital liquidity in New York, have more low-cost available capital for projects, reduce the cost for end users, get more projects funded, help develop a robust market for lenders, increase contractor project completion rate. With that, just a few housekeeping issues. This is being recorded, as I indicated earlier. If you have questions, please submit that through your Q&A text box on the WebEx, and we'll work through those questions as efficiently as we can. With that, I'd like to invite Blake, Board Chair of Clean Energy Credit Union, to do the presentation on the products that they're offering for New York.
Thanks, John. Someone.
Next slide,
doing
please.
the slides. Yep. Great. So again, my name is Blake Jones with Clean Energy Credit Union. And Clean Energy Credit Union is a relatively new credit union. We received our federal charter in 2017. We've been lending for about 3 years. And since then, it's been the metaphorical hockey stick in terms of how much we've been ramping up our lending. Next slide, please. Clean Energy Credit Union is an online-only federally chartered credit union, and we specialize in clean energy and energy-saving loans. That's all we do. Those are the only types of loans we make. So, for example, you can get an auto loan with us, but it's got to be for an electric vehicle, or you can get a home improvement loan with us, but it has to be for a green home improvement, like a solar system, a geothermal system, other green home improvements. And since we started lending 3 years ago, as I mentioned, it's been we've made over 4,000 clean energy loans. So we've made a lot, growing very quickly, and very excited to talk to you all today. Next slide, please. The credit union, just as some quick background, the credit unions provide the same products and services as the bank, but they are not-for-profit, tax-exempt entities. And they're also financial services cooperatives, so they're democratically owned and controlled by their members. Whereas a bank, their main reason for existence is to maximize profit for their stockholders. A credit union exists to fulfill its mission and to serve its members. Next slide, please. Our vision is a world where everyone can participate in the clean energy movement. And we want to help manifest that vision by doing two things. Next slide, please. First, we want to make it easier for everyone to afford to use clean energy or to save energy by providing the best loans in the country for these types of projects. The second thing we want to do is we want to make it easier for everyone to invest in the clean energy movement by being able to open a checking account, savings account, money market account with us, where deposits are federally insured, just like they would be if they were at Wells Fargo or Bank of America. But the deposits are only used to help someone else finance their clean energy or energy saving project. So it's like a federally insured way to invest in clean energy projects. Next slide, please. So Clean Energy Credit Union's unique, not in any one of these ways, but in these combination of ways. The credit union structure gives us some nice advantages. First, we're tax exempt. And second, we don't have to pay stockholders dividends. So we take the money that we'd otherwise send to Uncle Sam and to stockholders, and we pass that through to our borrowers in the form of better loan terms. Second, we have an exclusive focus on clean energy lending. It's in our mission, it's in our DNA. We have team members who are clean energy geeks like me, and we know that clean energy markets change very quickly, very rapidly, and we're able to adapt to those changes because this is all that we do. This is all we focus on. Third, we're a digital only or online only credit union. We don't have any brick and mortar branches, and the savings and overhead from not having those brick and mortar branches, we pass that through as well to borrowers in the form of better loan terms. And then lastly, we want to be as friendly and as easy as possible for contractors like you all to work with. So we go out of our way to try to develop those partnerships, get feedback from contractors and dealers of how we can make ourselves easier to work with, and hopefully you'll see that reflected in our loan products. Next, please. Credit unions are different from banks in another way, and that's that banks can serve the general public, but credit unions can only serve what's called a field of membership. Many credit unions serve people who live in a certain county or a certain geography. Other credit unions serve employees who work at a certain company or group of companies. Our credit union, we serve, or people who can join our credit union are members of these organizations that are listed here. A lot of them are networks or organizations of fellow clean energy geeks or enviro geeks, and we're adding to this list all the time. But for those of you, you may be familiar with Northeast Sustainable Energy Association. A lot of folks from New York join and support that organization. If someone is a member of one of these organizations, or if they're in the household or the family of someone who's in one of those organizations, they're automatically eligible to join Clean Energy Credit Union. If they're not, it's very easy for them to join one of these. And once they join one of these, then they're eligible to join Clean Energy Credit Union. They don't have to maintain their membership in these organizations. Once you're a member of a credit union, you're a member of that credit union for life. American Solar Energy Society, which is second on the list, we have a discount code on our website. It costs $10 to join. They've been around since 1954, which is a very old organization for solar energy geeks. And Solar United Neighbors is second from the last. That's free to join. I don't remember what it costs to join Northeast Sustainable Energy Association, but I would say that's the closest regional organization for New York State residents. Next slide, please. The main loan types that we offer are residential geothermal system loans, residential solar PV system loans, a big catch-all that we call green home improvement loans, which covers almost all types of green home improvements. We do have a list on our website, and it's linked there on the slide, of all of our eligible products, measures, projects to see if they qualify. But a really good rule of thumb is that if something is Energy Star rated, like if it's somebody's getting a new water heater or a new furnace, if it's Energy Star rated, then it qualifies for one of our green home improvement loans. We do also have electric vehicle loans, but that's not part of the NYCERTA program. And the top three loan types, they are, and what we're offering to all New York State residents is a 0.5% rate discount off of all the standard rates for those loan types. So anyone who lives in New York, they're eligible for that 0.5% rate discount. Next slide, please. For solar PV and geothermal loans, which are the most popular loan types with us, we utilize the combo loan structure. For those of you who've been in either of these industries for a while, Enerbank and GreenSky pioneered these back in 2008, 2009, or at least brought them over from regular home improvement to green home improvements. And what it does is it's two separate loans that are part of the combo loan. The first loan is it's a tax credit loan. So the tax credit for solar and geothermal is 26% of the total project cost. There's a loan for 12 or 18 months that's just intended to float the amount of the tax credit until after next April, when someone will hopefully benefit from that 26% tax credit. Then the remaining 74%, that's in a long-term loan of 12, 15, or 20 years. We do have a flyer on our website, a one-page flyer that helps explain how the combo loan works, which is very helpful when explaining it to customers, but it's a tried and true way of providing loans for solar PV and geothermal, and this is the loan structure that we use. Next slide, please. The terms for our solar and geothermal loans are shown here. Short-term loan, we have rates as low as 4.49%. That includes 0.5% discount for New York State residents. That's either 12 or 18 months. It's a balloon loan, so interest accrues. There's no payments of principal or interest until the very end. And then the principal amount is due plus whatever interest is accrued. If someone prepays it, there's no prepayment penalty. If they prepay it at 7 months, they only pay for 7 months worth of interest at that time. And again, this is intended to float the tax credit so that when someone does take advantage of the tax credit, they'll then use that tax credit amount to pay off that short-term loan. Then we have a long-term loan for 12, 15, or 20 years. You can see the interest rates there between 4.49 and 4.99% are our lowest rates for the best FICO scores. And those terms allow lots of flexibility. If someone wants to pay it off earlier with a 12-year loan, or if they want to minimize their monthly payments with a 20-year loan, they've got that flexibility. Our rates are available on our website. You can see the link there, cleanenergycu.org/rates. And that provides additional details and terms for all of our loan types. Next slide, please. Then our green home improvement loan terms. We have unsecured loans and secured loans. Unsecured loans are for projects for which there's no collateral. There's no equipment that we can take a security interest in. So a good example would be insulation. If it's an insulation project, we don't want to try to repossess insulation, or a new roof. If someone's getting a new roof and they're using Energy Star rated shingles, they can get an unsecured loan with us. The rates aren't as good. The terms are only 3 and 5 years. But if you have a project for which there is equipment, like a water heater, heat pump, batteries for a battery-only project to go with someone who's already installed solar maybe a couple years ago, then you can use a secured green home improvement loan. There's 3, 5, 10-year terms and rates as low as 2.75%, depending on the term. And these rates do include the 0.5% discount for New York State residents. Next slide, please. The collateral for secured loans, we conduct a UCC filing. This is quite common among specialty lenders. We conduct that filing at the state and the county level. And it is not a lien on the real estate. So it does not encumber the real estate. It's intended to look like a lien on the real estate, as if someone wants to sell their home. We want the buyer's title company to see that we have a security interest in the equipment and make sure that the seller pays off their loan before they sell their house, but it is not a lien on the real estate. And just want everyone to rest assured that if one of our borrowers, one of our members, wants to refinance their mortgage while they have a loan with us, or if they want to get a second mortgage, that is not a problem, because these are not liens. We don't have a security interest in the real estate. Last year, when interest rates were low, we had hundreds of our members refinance their first mortgage or get a second mortgage. And I'm happy to say we're batting 1,000. We've never had an issue with one of our borrowers being able to refinance their mortgage or get a second mortgage. Next slide, please. Fees, we have a $25 processing fee per loan. For a green home improvement loan, it's $25. For a combo loan, that would be $50. Then there's a flat fee of either $100 or $250 per project for the UCC filing. It depends on the loan amount, it depends on FICO score, and a few other things, but it's a flat fee of either $100 or $250 for that UCC filing. We don't have any dealer fees. We know that that's quite common, particularly among solar lenders, but we don't have any dealer fees. Next slide, please. Loan disbursements. When a green home improvement loan, when someone completes the project and they pass inspection with the authority having jurisdiction, the AHJ, they provide us with that proof of past inspection and any other outstanding documents, and we pay 100% of the loan proceeds. For solar PV and geothermal, the short-term loan, which is usually 26% of the total project cost, will disperse those loan proceeds when you commence installation at the site. Then the long-term loan proceeds, which is usually 74% of the total project cost, we'll pay that out for solar, when you obtain permission to operate from the utility, or with geothermal, since that's not applicable, we'll pay that out when you pass inspection with the AHJ. The disbursements are made directly to the contractor. They don't go to the homeowner. They go directly to the contractor via check or ACH transfer. And we have net 20 payment terms from the time that you invoice us or that we approve the documents. We average paying within net 7, net 8 days. At the end of the year last year, when the tax credit, everyone thought the tax credit was going to go down from 26% to 22%. We had a rush of projects in Q4. That's when we needed to utilize those net 20 payment terms, but throughout the rest of the year, we're paying within 7 or 8 days. Next slide, please. Underwriting, we can approve most credit applications through instant decisioning with our software, like instantaneously, or within 1 to 3 business days, depending on, we have a lot of applications that are submitted starting Friday night over the weekend. So Monday there's a big queue to work through, but usually within 1 to 3 business days. And we average, I want to say 7 to 8 out of 10 are instant decisioned. We can approve low FICO scores, even below 600, and high debt to income ratios, even in the 70 percentile. Those are possible. Maybe not both at the same time, but those are definitely possible, but they require some extra time. They can require up to a week if it's a very difficult credit situation to analyze or to approve. What I like to say is that we're a slow yes lender. It's our mission, we're a nonprofit, we're really trying hard to approve the loan, to help the borrower to do their green home improvement. But if they've got a tough credit situation, it may take us longer. I know that some salespeople, some contractors prefer a fast no, so that they can move on and try to find another lender, another financing option, but we are a slow yes lender. And then credit approvals, they expire 6 months after pre-approval, after conditional approval. If someone needs their project to be extended after 6 months, we can do a soft credit pull to extend it for another 3 months. We're seeing a lot of delays right now with Tesla Powerwall battery storage. Those are late in being delivered. A lot of people are delaying their projects, so we can extend it by another 3 months. Or with a lot of those projects, the solar and the batteries were originally in one solar combo loan. What we did was we carved out the Tesla Powerwalls, put those in a separate secured green home improvement loan, continued forward with the solar project, and then we're just going to wait for the batteries to be delivered, and then that'll happen. Those will be financed in a separate secured green home improvement loan. Next slide, please. Applying for a loan is easy, just going to our website and clicking on one of the various places where it has an apply button, or typing in cleanenergycu.org/apply. We also have a dealer portal. Those dealers that have been working with us can be onboarded to use the dealer portal, in which case they can initiate loan applications on behalf of the customer, and they also have, that gives them more visibility as to what the status is and what documents are still outstanding. That's been very popular too. Next slide, please. We have lots of resources available. So for example, we have a 4-page info packet for contractors, a different packet for geothermal versus solar contractors, for example, and it outlines our entire process, our payment terms, the documents that are required, everything like that. We also have lots of marketing collateral that can help with customers, like 1-page step-by-step instructions that just sets the expectation and lets the customers know, here's what's going to be expected of me, here's what my steps are, things like that. Then we have other things like a 1-page flyer about Clean Energy Credit Union or the American Solar Energy Society, which a lot of our members joined or were members of in order to be eligible to join Clean Energy Credit Union. And we have a monthly loan payment calculator if you're wanting to talk with your customers about what their different options are, if they were to get loans of different terms, how that would translate into different monthly payments over the life of their loan. Next slide, please. If you are interested in working with us, please reach out to dealers@cleanenergycu.org. If you haven't worked with us before, you're interested in our processes, we can send you those resources that I mentioned on the last slide. We can let you know, answer any questions that you might have, anything related to dealers, contractors, the process, things from your perspective as a contractor. You can send an email there. And then we also have a general email inbox, info@cleanenergycu.org. If you've got an existing customer who has applied with us and you're wanting to follow up on a credit application or a credit approval or something that's not a dealer specific question, you can send it to info@cleanenergycu.org. Otherwise, just send it to dealers@cleanenergycu.org and we can help find the right person within the credit union to help answer your question. I think that was my last slide. Thanks very much for listening, and we'd love to work with you all and do more projects in New York.
Thank you, Blake. Excellent. And I have to tell you, there's a lot of excitement building up. I'm looking at the questions coming in. Folks, if you haven't asked a question, submit them now. We're going to take a few minutes to follow through these questions. I have to tell you, the most exciting was we've got someone blessing you for not charging dealer fees, so I'm excited about that. Couple of questions came in. Are you only looking to do residential, or can you also do maybe commercial and multifamily possibly?
So right now we're only doing residential. I think in another year or two, we're hoping to also be able to do commercial or nonprofit loans. But I think that Jay will be talking about your commercial options
Correct.
next. In the meantime, yep.
Yeah. And one other question was just a little bit more clarification. Do the contractors also need to join these organizations so that they can work with Clean Energy Credit Union, or just the homeowner joins one of those associations?
It's the latter. So just a homeowner needs to join one of those organizations in order to be eligible to join the credit union. The contractor, the dealer, does not. And if you're working with a household, like say 2 spouses, only one of the spouses needs to join one of those organizations, and then everyone in the household is eligible to join the credit union after that.
Perfect. And obviously, folks, these slides will be available, and we'll get those out to you. A question that just came in was, are high volume dealers assigned I guess, a credit analyst or a banker contact?
No, we thought about that, but people go on vacation. Different loan analysts or loan officers or underwriters have different specializations. So we like having the team approach, but we do work with a lot of high volume dealers and who do hundreds of loans with us per year. And we like it where the first person available is going to be taking your your customer and doing the underwriting. But in terms of other dealer related issues, we do have a dedicated dealer relations team that right now there's 3 of us on it. I'm one of them. And when you've got questions or you're needing help with something or facilitating something, you can look to the dealer relations team. Same kind of thing, where if you send it to dealers@cleanenergycu.org, the first team member who sees your question is going to take it and try to help you. But if there is some historical issue, or it's a particular project like a Habitat for Humanity project, or something where there's some history, we will definitely make sure that the team member who's familiar with that history will help you with an issue on an ongoing basis.
That's great. Couple of other questions are coming in that the application, does that come from the customer or the contractor? And then there's some questions around the resources that you mentioned, 4-pager. I think you've shared those with NYCERDA. Are those available to be able to download it from their website?
They're not on the website, but if you reach out to dealers@cleanenergycu.org, we can send you whichever resources you want, particularly the 4-pager. I'm gonna attempt to do this, bear with me, but if you're a geothermal contractor, you can go to cleanenergycu.org/geocontractor. If you're a solar contractor, you can go to cleanenergycu.org/PV contractor, where the P and the V are capitalized. But if you send us an email at dealers@cleanenergycu.org, dealers at what you see on the slide, if you send an email there, we'll make sure that you get the resources that you need.
Yeah, so there's there's lots of questions coming in. Obviously, folks are asking about co-ops and condos, and as Blake has already mentioned, they will be looking into the nonprofit sector in away from the residential as well. So we'll obviously keep tabs of when that is. As we circulate this deck, we can also share the product sheets from Clean Energy Credit Union, as well as what you can access online. One question, we're going to take 2 more questions and then we'll shift over. In terms of the onboarding process for a contractor, how long does that process take? And then how quickly does the customer receive loan documents after the project cost is determined? Basically, it's eligibility of how much of the project is eligible.
How much of the project is eligible? The entire project amount is eligible if it's
Right.
mission aligned products. If someone does a Energy Star rated hot water heater and an Energy Star rated furnace, but then they also want to get redo their kitchen, the kitchen part is not mission aligned, that wouldn't be able to be
Right.
included in one of our green home improvement loans. And when someone applies, they apply with us directly if they apply through our website. And you can go to our website and look for the apply button, or it's cleanenergycu.org/apply. They're going through that application process themselves. We do have also an online dealer portal, which takes longer. Once a dealer gets to know us, they can learn how to use that dealer portal. Then they're able to initiate the loan applications, but always the customer is filling out the loan application. We have a lot of dealers who like that online dealer portal, though, because they can see what the status is. They have visibility to what tasks are outstanding, what documents still need to be uploaded, and they can help move it along, usher it along with the customer. And then I see another question about NYCERDA. NYCERDA is not involved in our process. The homeowner's just dealing directly with Clean Energy Credit Union. So our partnership with NYCERDA is more of a, maybe called a passive partnership. NYCERDA doesn't play a role. There's no documentation that needs to be filled out. There's no approval process or step or any responsibility that NYCERDA has in it. I'd call it a passive relationship, in that just the nature of our relationship, we provide the 0.5% rate discount as long as somebody lets us know that they're a New York State resident, and we'll of course see that when we see their address. Then they're eligible for the 0.5% rate discount without any other additional steps in the process.
Yeah, sorry, Blake, that's 50 basis points reduction, right? Interest
Excuse
rates.
me, yes, 50
Yeah,
basis
50
points,
basis points, not 25.
0.5%.
And just to wrap this part of the session up, NYCERDA is supporting Clean Energy Credit Union through other mechanisms. We're not involved in any aspect of underwriting loans or approving loans or funding loans or any of that. NYCERDA obviously runs the Green Job Green New York program as a separate. We're so excited with the product offering that Blake and company are offering that we wanted to bring this to our contractor base. This is part of our strategy to expand capital that's available at all levels. And I'm sure as we'll have Jay Mervs talk about what they're doing on the commercial side and the multifamily, that'll answer some of the open questions that are still out there. Blake, I'm sorry, Blake, thank you very much. This is very exciting. We encourage all the contractors to contact you directly. Some folks did ask for your direct email. I don't know if you want to share that now, or we can follow up with them.
Yeah, it's blake.jones@cleanenergycu.org, but I would recommend you use dealers@cleanenergycu.org, just in case I'm busy or I'm tied up in meetings, or my wife's out of town, so I'm on kid duty a little bit more than normal right now. You'll get a response more quickly if you send it to dealers, but you can also send it to blake.jones@cleanenergycu.org.
Fantastic. Really appreciate you sharing the information with us. So with that, folks, we're going to switch over to the multifamily commercial side. I'm excited. Jay Mervs is a Director of Business Development at NYCEEC. He has compressed all that information in basically one slide. So pay attention, and we'll have a follow-up questions after his presentation as well. With that, I'll turn it over to Jay.
Thanks, John. Thanks, John. I learned a lot about the residential side of the business, and as is mentioned a couple times, we're going to focus on the commercial side, which very much includes multifamily, rentals, co-op, condos. Basically, we're talking about 5 units and up in that definition. But I think if there's one thing that I learned, and one thing that I'd ask people to take away, that if you're looking for something to happen in 1 to 3 days, call Blake. Nothing's going to happen here in 1 to 3 days. But we will work hard and we will work fast, and hopefully we'll get the answers that you need to get. Couple of things. We are NYCEEC. We were established by the city of New York about 10 years ago. As a matter of fact, next month will be the 10-year anniversary when our founder and CEO was hired. And a few things may have happened before that, but in my book, in my book, you know, our 10-year anniversary is coming up. Importantly, as of, well, I guess at this point is maybe six or so years ago, we have expanded our service territory, if you will. So certainly for purposes of this webinar, we can do financings throughout the entire state of New York. And in fact, our area really is from the Maryland, DC area up through the Mid-Atlantic and into lower New England, Connecticut, Rhode Island, Massachusetts. So focus today, of course, is on New York, and we work very, very, very closely with NYCERDA. But you know, if you do have customers and projects in any of those other states that I mentioned, please reach out as well. We are a market rate lender. We like to consider ourselves on the low end of the market rate. You know, we are mission based. We will go the extra mile. We do have a couple of areas where, you know, when we really want to focus on an area, we try to be aggressive as possible and can really, I think, come in with some very, very attractive rates if your project involves solar and storage technologies. If your project is in the affordable housing space or is beneficial to a low or, you know, low moderate income type community, or if your project involves pre-development on the multifamily side, and I'll speak a little bit more about pre-development in a couple of minutes. We are building agnostic, if you will. So as I mentioned a moment ago, a lot of work we do is in multifamily. And again, condos are eligible. We do a lot of condo work, working with the condominium associations, obviously, co-ops, similar, and then of course, you know, rentals, all on the multifamily residential side. Then beyond that, commercial and industrial. We've done a number of deals in the office space. And you know, some work in the other sectors there. Nonprofit is fine. Healthcare, institutional, things like assisted living, education, all of those sectors. So really, it runs the full gamut outside of, you know, single family residential, four units or less. And then finally, really open to, you know, all technologies. You know, our focus is the technologies that, you know, save energy, reduce greenhouse gas emissions, and importantly, help the state of New York in this case, or the given municipality, meet its environmental goals. So for instance, something like storage, you know, if you think about storage, it doesn't really save energy. You know, generally it takes more energy in than it puts out, but it is a critical component to greening the grid and grid reliability. So we're happy to finance that. Okay, we have several projects, and I can see we actually had 2 presentations sent. So I guess it was a little decided which one. It looks like we actually do have the multi-page presentation. So that's good here. So the first product I wanted to spend a minute or two on is what we call our equipment loan, or sometimes we call it a direct loan. And this is the situation where the building owner themselves is going to borrow. And from what I'm hearing before, this is kind of analogous to I think some of the things that Blake had said, where he was dealing with a homeowner. I think there's a strong analogy here. We're dealing with the building owner. So the building owner wants to embark on an energy efficiency clean energy measure or series of measures. We will work directly with that building owner. We will work with the contractor whoever is sort of, spearheading that, if you will. Critical issue for us there is obviously understanding the project, and understanding the credit standing, if you will, of the building owner. This is not a scenario, unlike the residential side. I know one of Blake's sides, they mentioned FICO scores. There's really not an analogy here. So what is important, if you, as a contractor, you want to make your sale, you want to get the project done. Okay, what's critical here to get that done in a timely fashion is to have the building owner be responsive with the materials that we need so that we can underwrite the loan. And it's pretty basic stuff. I mean, as you can imagine, it's things like 2-3 years of financial statements. It's if in a rental building, it would be rent rolls, and the vacancy rates, those sorts of things. In a co-op or condo situation, it would be the ownership, the common charges, history of common charges, those payments. We would want to understand if there's a mortgage on the building. We'd want to understand that. Has there been a good payment history on that mortgage? Is the building current on its taxes? It's all relatively straightforward. We have an application. Application is pretty brief. It's just a couple of pages, and then it has an attachment to it to the list of supporting documents, a number of which I just mentioned. The number one source of delay in getting projects done is not getting timely information from the borrower. In this case, the building owner. You'll see on the slide here it says minimum loan size 200,000. Yeah, I mean, if you have a loan that's slightly smaller, don't hesitate. But that's generally where it starts to get, it starts to lose efficiency, I will say, in terms of doing loans when they start getting substantially smaller than that. We're a nonprofit, like Blake's organization. We work very hard, to keep our costs down. We do a lot of work internally, legal work internally, or limit our use of outside counsel to keep those costs down. Again, try to keep those fees down. But when a loan gets too small, just sometimes the fees sort of, just the cost of doing the loans can sometimes overwhelm the economics. Expect to borrow about 80 to 90% of the project cost. We can go up to 100% if it is, again, as I mentioned a moment ago, sort of an affordable housing, a benefit to an LMI community type situation. What we will do is, we will understand the project. That's where you as the contractor comes in, making sure we understand the project, we understand the energy savings. We have engineering resources on staff that'll review that, and we will work with you. We'll make our own estimate of the energy savings and therefore the resultant cost savings, or in a solar instance, the production, savings or productions depending on the nature of the project. And we will craft a loan that is affordable under that set of assumptions related to the project. So long story short, we want the payment to us to be equal to, or hopefully less than, the savings that's going to be generated by the project, so that the building owner is cash flow positive from day one. That's not a hard and fast rule, and there are many instances where that doesn't have to be the case. And once our loan is paid off, it's sort of all gravy from there, if you will, for the building owner. But that is, what I would say would be the optimal situation. We do construction to permanent. So many times we want, we come in at at the end, if you will, when construction is complete. But mostly the loan is going on during construction. We'll work with you, the contractor, we'll work with the building owner to make sure that we have a draw schedule that works for everybody. I mean, I think the main takeaway I'd want people to know from this is, we are going to allow draws in our loans that are by and large commensurate with the percentage of work that's been done on the project. So we understand there need to be deposits and upfront payments, and those are all okay within reason. But in general, when 50% of the work is done, you'll have 50% of our loan can be drawn, and you as the contractor would be paid 50%. And then we can bridge the incentives too. So part of the money is coming in from NYCERDA, and if that's coming in later on and it helps the cash flow to get financing against those incentives, we're very well experienced at doing that, and that works. We've got a great relationship with NYCERDA, as well as Con Ed and some of the other utilities. It doesn't have to be a NYCERDA incentive, and that really works well. Building types we touched on. And again, technologies that we touched on. On our website, NYCEEC.com, you can go, and there's a couple featured projects here on this slide, and you can take a look and see more specific write-ups of those projects. Okay, I'm going to jump around a little bit. Let me see the next slide, please. Okay, I'm gonna skip over this because this could be its own baseload could be its own webinar. So I'll touch on it for a minute later, but please skip to the next slide, please. Okay, this is an ESA loan. The slide after this is for a power purchase agreement. So these are similar. They're very analogous. In an energy services agreement loan, right? You're doing measures that are going to save energy for the building. In a power purchase agreement, you're doing measures that are producing power, be it that solar or cogeneration or things like that, and then you're going to sell that power into a building. So so in this situation, it's sort of a dual analysis. Okay, we will look at your project. We will understand the technology, we will understand the cash flows, and we will be able to present a loan idea to you such that those cash flows are sufficient to pay off our loan, with an appropriate debt service coverage cushion. And that could be depending on the project and the certainty of the cash flows. That could be as low as 1.1 times when we're doing like hedged SRECs. New York State doesn't really have SRECs, but some other states do. Or it could be 1.2, 1.25 if you're doing community solar where pricing over time is uncertain, and and things like that. So we will come up with a debt service schedule and a loan terms that fits the project. Importantly, if you are a developer of energy efficiency projects, we need to understand who the off-taker is. So we have seen situations where, let me rip on hospitals for a second, that where a developer goes and says, I've got a great project with a hospital. Well, you look around and it's sort of like, that hospital is in dire financial straits. Many of them are. I mean, that's just the reality. And it's very hard for us to say, okay, well, we're going to make a 12-year loan to you against your project against a hospital that might not be around in 3 years. So understand going in that we're going to need all of that analysis that I just talked about in the previous slide. We are going to need that analysis against your customer for an energy services agreement and a power purchase agreement. And usually, I think the customers understand that, and we get cooperation. I don't want to make it sound like it's some big hurdle that can't be understood. We do these transactions all the time, but it's a dual dual approach. Again, there's the possibility of incentive bridging, again here expect maybe up to about 80% of the project cost. Next slide, please. That should say power purchase. Yes, the power purchase, as I said, is analogous. It's just which technology are we talking about? So you can move forward. Okay, move forward one more. Okay, yeah, I want to talk about this for a moment. The multifamily solar loan is an interesting product that we developed, and listening to Blake, I actually think it's pretty similar to that combo loan that Blake was talking about. It obviously has differences, but I think most of the solar contractors on the call would understand that in a condo or co-op setting, the investment tax credit flows through to the unit owners. So you don't necessarily need outside tax equity, which is obviously expensive, to do these solar loans. So these loans are perfect again for condos and co-ops. Again, and by the way, that applies to federal and New York State. And then the like New York City tax abatements, that inures to the co-op and condo owners directly anyway. So what we do here is structure a loan that basically, I want to be mindful of time, basically just accelerates the repayment to line up with the investment tax credit. So we'll make the loan. We'll have a chunky mandatory prepayment, usually in year 2, which is reflective of that investment tax credit. It's sort of like the first part of the combo loan. And then the rest of the loan will amortize out over X number of years, 8 or 9 or 10 years, whatever is appropriate. And I think this is a great way to bring solar to multifamily buildings. Now, fair warning, it is a bit complicated to get that building, that condominium association to say yes, because it does need the buy-in of, like, depending on the charter of that condominium, X percentage. It's often 75% or 80% or a large number, and that's fair because remember in order to pay back the loan, the common charges need to be adjusted to reflect the fact that the individual owners are getting this tax benefit. So they get the tax benefit. That's got to be captured through an increased assessment on the common charge and then flow through to us to pay through the loan. This is like I said, it's a neat idea. We've done it several times. I hope we could do it more. I just want to make sure that you realize that that's out there, and don't shy away from thinking about multifamily customers because, we've got to get tax equity to get this done, and that's expensive, and it'll kill the economics. That's my main comments. I just wanted to touch on a couple of things. PACE loan, I mentioned. New York City, New York State has had PACE for a number of years now. There are many PACE lenders out there that you can talk to. New York City is launching its PACE program literally any week now, and we're down to counting weeks. We will be active in that market. There'll be others as well. The number one benefit of PACE loans, in my view, is that because they are secured by the underlying building, you can go very long term and have smaller, monthly payments, if you will. Which really help the cash flow. So 20-year PACE loan is very common, where these other loans that I'm talking about that are effectively only secured by the equipment being financed generally cap out at around 12 years, maybe a tad longer for solar. We will do loans that just finance the incentive bridge. We mentioned that as part of things, but if you have a project, we're just looking at one now, where there's about $900,000 of incentives, primarily from NYCERDA, and we'll be helping the contractor bridge those incentives. We'll make them the loan. We get paid back effectively, not so much directly from NYCERDA, but directly from the NYCERDA funds. Pre-development, I mentioned we can get, aggressive on rate there. Again, definitionally, pre-development to us means that there's another loan. Doesn't have to be ironclad signed, but there's another lender waiting in the wings. And certain amount of work, whether it's design work or planning work, has to be done before that lender can close on his loan. We can make that pre-development loan and then get paid back from those proceeds. Next slide. I think there was an email slide. Is there a next slide? Yeah, there you go. Okay, so there's my email address. Also, as was kind of Blake mentioned, green loans at NYCEEC.com is an even better email. That way, you'll get a response quickly. I might be out or not so much on kid duty, but on dog duty. That's a great way to get hold of us. And again, NYCEEC.com will, we have lots of what we call deal spotlights. So transactions we've done across many sectors, many technologies, and you can learn better about, what we do.
Fantastic. Jay, just really fantastic. Thank you very much. Hey, folks, I think I see still about close to 60 folks are still engaged with us. Jay, there was one quick question on technology type, and I think you've already probably covered it, but would air source geothermal heat pumps, VRFs, would be eligible in any of the architecture types?
Absolutely.
Right.
Absolutely.
And fantastic, as expected. So folks, if you have any questions still, do send them out. We have about 5-6 minutes left to wind this up. To the folks who are still attending, we would appreciate it. How did we do today? Do you like what you got from this? Send us a quick note in the Q&A and let us know what you feel about it. We're planning on doing a lot more of this down the road as we get even additional credit unions in New York involved. Q&A is open, so if you have questions, this is a great time to ask those questions. As far as the presentation, the WebEx recording, we'll work with staff internally. We should be able to send all that out to everybody who registered for this session. We'll just clean it up a little bit. And then obviously you have everybody's direct contact. Feel free to contact me on any financing related issues, and we can work with you and direct you to the folks either at both of these organizations and others that we're engaged with as well. And I've been told that I should remind you one more time, recording as well as the presentations will be available. Thank you very much. I don't see any other questions coming up. So at that point, I guess we'll finalize. We'll give it one more minute if someone is finishing typing a question, just in case. Otherwise, okay, we got one last minute question coming in. Would you consider lending to energy efficiency green development in Bucks County? I think we're obviously open in all of New York, and I don't know where Bucks County is, Pennsylvania, right?
Bucks County is my mother-in-law lives in Bucks County. So does that mean yes, or I'll go with yes. Very good.
And then question, is there any consideration for smaller loans in the 70,000 to 150? Some folks are interested in, helping, I guess, at a very local community level too.
Yeah, we have a couple of correspondents that we work with. So if you wanna email me a thought or give a call, and I'm more than always happy to listen. And if we can't help you, which we, if it's 50, 70,000, we probably can't. We do have a couple of correspondents I think we can refer you to.
That's fantastic. Again, folks, 1 or 2 more minutes for some last minute questions. We really appreciate all the engagement. All right. Looks like that's a wrap. Right? We'll get the presentation. We'll get all the contact information to everybody. Really appreciate you joining today. Reach out to me, anything you can, anything you need on a financing solution side that we can help with. We're happy to engage. There's lots of interesting things that we're developing, and we'll look forward to re-engaging with you folks very soon.
Thank you, John.
Thank you, gentlemen. And I'd like to thank